Wealthy families are paying their 6-year-olds full salaries. They're deducting those salaries from their own taxes, and then they're using the money to fund retirement accounts that will be worth millions before the kid even graduates high school. It's completely legal. Almost nobody outside their accountant's office knows that it exists, and the math is so good, well, it should be illegal. I'm Nate. I dig into the moves the people at the top are making because the gap between what they do and what gets taught to the rest of us is exactly where wealth either gets built or doesn't. So here's the move. A wealthy family owns a business. The business hires their kid. The kid does real work, filing, shredding, helping with social media, whatever fits their age. The business pays the kid a salary. Let's say $14,000 a year. That's a real number wealthy families are using. Now watch the 4 things that happen at the same time. Number 1, business deducts that $14,000 from its taxable income. At a high tax bracket, that saves the parents, $5,000 in taxes immediately. 2, the kid pays 0 federal income tax on that money. Kids have their own standard deduction, around $14,600 in 2026, and anything under it is completely tax-free. 3, $7,000 of it goes straight into a custodial Roth IRA in the kid's name, growing tax-free for the next 60 years. 4, the other $7,000 pays for the kid's actual life, clothes, school supplies, activities, wherever the parents were going to buy anyway. Except now, it's spending pre-tax dollars instead of post-tax dollars. If you start at age 6 and do this every year until his kids hits 18, that Roth is worth roughly $3 million by the time they're 65, from about $84,000 in total contributions. Now here's the part that should bother you. This whole strategy requires owning a business. If you're a W-2 employee at a corporate job, you can't put your kid on a payroll. So the same tax code that lets a business owner build a $3 million nest egg actually locks out anyone working a regular job. That's the structural advantage. It's not the IRA itself, the business that makes the IRA possible. I'm not a financial advisor. I'm not telling you to buy or sell anything. I'm just showing you what the wealthy actually do that you weren't taught. So what do you do with this? If you already own a business, even a small side hustle or rental property, open the custodial Roth IRA today. Set up real documented work. Pay them a fair wage. Start the compounding clock. If you don't own a business, this is one of the strongest arguments I've ever seen for starting one. Even an Etsy shop, even a part-time service business. The unlock isn't being rich. It's being self-employed. And if none of that fits your life right now, the second your kid takes their real first summer job, open the custodial Roth then. The math still bends in your favor. One important warning. The IRS allows this strategy, but they will absolutely disallow it if you just pay your kid and call it a job. Real work, documented timesheets, reasonable wages. Treat it like the legitimate business arrangement it has to be. The wealthy aren't using a different account than you. They're using a different life setup that makes the account 10 times more powerful. Fall for more and hate this market with me.